Thanks, Alicia. Well, results out from Datatec this morning show an 11% dip in revenue for the year to February, while underlying earnings a share are down 8.5% at 30.3 US cents. The group's kept its capital distribution steady at 12 cents a share. Joining me from more now is CEO Jens Montanana. Jens, thanks for coming to the studio today. Well, you had last year what appears to be a very tough first half, followed by a strong second half. Your second half underlying earnings a share up 77%. What's behind the turnaround? Is it companies starting to spend again? Although you do have a traditionally stronger second half, don't you?
Yeah, well, last year, I mean, obviously it wasn't the case the year before. Our seasonally or traditionally stronger H2 over H1 did return last year. I mean, the sort of key takeaways for last year, as you mentioned, big jump in H2. H1 was pretty bad, for most companies in our sector, and in fact across universal companies in general. I think the features from last year that stand out were our cost control and how we managed to reduce our operating expenses. OPEX fell at the same rate or even slightly more than our revenues fell, which means we managed to get on the gas very early, and as a consequence of that, our margins held up. Our margins hardly moved at all last year, even though there was a compression of the top line. And then the other feature is we very strong working capital and balance sheet management, and we're headed into what hopefully will be a gradual growth recovery process now with a very strong balance sheet and a lot of cash on hand.
Well, as you enter that gradual growth recovery, can you keep your costs down so that the margins widen even further? And of course, you talked about the EBITDA margin down from 3% to 2.9% despite revenue coming down so sharply. So this high operating gearing is coming through. Can you make it even better as you go forward?
Yes, I mean, we're not. We're being quite prudent in our planning for this year. We guided this morning in terms of where we expect revenues to be up maybe 10, 11, 12% this year. That's organic. We expect that earnings, earnings might grow at 2x or 1.5 to 2 times our revenue growth. So that means that there's still considerable operating leverage to be had. But we think the real expansion will most probably come in the year after. I mean, when you look back now over last year, I think that the story is going to really be that we're going to have lost 2 years, because everything started at the back end of 2008, and people now are talking about a recovery, but as you can see, parts of Europe and so on, we're still staggering back to our feet. So our planning and spanner control for the year ahead is based on prudent assumptions, cautious optimism, and we're not really expecting to do any net hiring this year. We're expecting that operating leverage to kick in with our existing business structure and manpower, really.
Well, with the question mark really hanging over Europe, as you say, where are you seeing the growth going forward? Of course, the Americas are starting to turn around. And of course, you made that Netstar Asia acquisition at the beginning of the year, which is giving you a foothold in China. And you do talk about China and Brazil in the commentary. Do you see big opportunities there?
Yeah, I think for us, it's really the B, I, and the C. We're not. We have no plans at present to venture into Russia. We have a presence in India. We have a very strong presence in Brazil. We've been there for over 10 years. And as you pointed out, we've recently got into China. I think all of those large developing markets are an opportunity for us. And in addition to that, there are other opportunities around the rest of Asia and also other parts of Latin America. Going back to developed markets, the US and North America is very important for us. It represents 40% of our business, and the US, as you know, in the last 5 years has generally been a laggard to the rest of the world. And we think now it's clear, and I think it reflects in the strength of the dollar, that there's a wide expectation that there's going to be a broad and sustainable recovery in the US, and that's clearly good for us. It's a home of innovation. Strong results last night from Cisco. The upgrade to the forward guidance from IBM.
And of course, you are a seller of Cisco systems,
We're
aren't you?
a large, 45% of our business in one way or the other is related to Cisco. Close to 20% of our business is related to IBM and things in their ecosystem. So yeah, obviously it's important for us that those organisations or those large companies are, pulling the industry forward.
What sort of growth businesses are you looking at going forward? Where are the opportunities? You do mention in the commentary connecting data, voice and video over IP networks. That's one area. I mean, is that what you're going to be looking at?
Yeah, I mean, I think the technology themes are security. The arrival of fourth generation mobile networks is going to unleash, another wave of in this time wireless broadband, more applications going on, more of the web going on to mobile. I mean, all these things at the periphery drive security threats, the need to manage your information, cloud computing services, which is basically where users now get to share computer infrastructure. You don't have to buy it yourself anymore. These are all opportunities that I think, and some of them are going to play well to pressure and economic pressure, and they are going to be areas of austerity going forward. And I think technology is mostly going to play a part in helping improve productivity and get businesses, governments, and so on to operate more.
How are you positioned for that as you stand at the moment, and what sort of acquisitions would you be looking at then to really piggyback off those new opportunities?
I think the biggest opportunity for us, I mean, we're a global player, and we have been for some time. We operate in over 40 countries around the world. The opportunities we think now, in terms of deploying our cash and using our relative, what we believe will be our relative strength in relation to some of our competitors, is not necessarily for more greenfields activity, but to do more in China, do more in India, do more in Brazil, and broaden our share of customer wallet, go deeper with domestic companies. For example, in China, our presence in China has really at this point been limited to serving the needs of multinationals operating in China. The next big step up, which is much bigger, is to serve domestic companies as they sort of improve technology adoption in their businesses.
Well, perhaps just before we finish off, just looking perhaps at the divisions within Datatec and how they performed. Westcon, you do point out, was the best performer. Logicalis a little bit further behind the curve, and then your consulting business even further behind. When would you expect them to catch up? When would you expect everything to be firing on all cylinders?
Westcon, our distribution business, mainly involved with capital equipment, started recovering almost this time last year. So it's just entered its fourth quarter of recovery. So it's a lead indicator in our business, early faller, early riser. Logicalis, IT services, stickier relationship with customer, more contractual in nature. That business really started recovering around November, December. We had a very strong December, but we have a large relationship with IBM. Their year end is December, and that has continued into this year, as we've seen considerable pickup in that business. Our consulting businesses, where we have a lot of work with network operators, service providers, governments, regulators, and so on. Last year was a pretty bad year. And I would say most probably only since March, April have we seen a recovery in that business. So sitting here today, we can really talk now about a more synchronised recovery across our group, where all divisions are, maybe not, they don't correlate, but they're all headed up at a fairly similar rate.